it so much you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Welcome to Is It Bad for the Economy, the podcast where we explore whether Trump's economic policies are helping, hurting, or just a load of hot air. My name's Kobi Tirey. I'm a Democratic strategist trying to figure out how the Democrats can finally get some credit for overperforming Republicans on the economy for essentially my entire lifetime. And I'm joined by the amazing financial practitioner, Banker Bill, who's doing some amazing work in a bank you've definitely heard of. Folks, you know we have to get right back into it with the Fed this week. The attack on Jerome Powell, or I should say, the announcement of the attack on Jerome Powell was completely unbelievable. And it's sad. It's sad to see this finally happen. But this has been a scandal in the making since June, since Powell first stepped foot in front of the Senate Banking Committee and started talking about this renovation, which has absolutely nothing to do with anything. Everybody's been screaming about the financial implications all week long. If you've been listening to this podcast, you know the background necessary to understand it. But I just want to say, Banker Bill, you've been saying this entire time it would never get to this point because the accusations are just completely frivolous, because there's absolutely no there. We almost went into a 20-minute breakdown of the scandal in June. You talked me out of it, not only because there was no there, but also because it was boring as hell. I have to say, though, I feel like I deserve a little credit for being confident that this scandal would absolutely come back to bite Powell and the Fed, and that it was worth looking into all those little details, some of which we'll get into in just a second. Can I finally get some credit for taking this scandal seriously, or are you still saying there's nothing really happening there? It's all a load of hot air.
You are correct for putting this on the radar and staying on top of it. I didn't think it'd become a thing because it's so ridiculous. Nonetheless, I'm still right that it is ridiculous. There's nothing there. There's no there. Okay. And this was the straw that broke the camel's back. Jerome Powell did exactly what I thought he should do. He took the political criticism. He got punched. The president could say whatever he wants about monetary policy. I think that the personal attacks were beyond the pale, but look, that's what Donald Trump does. Powell took it. You got to remember, Powell is a lawyer by trade. He was a lawyer first. The Federal Reserve gets grand jury subpoenas for information. Okay, you go and get a grand jury subpoena. What are you doing that for? Looking into criminal activity. So that was it. That was the straw that broke the camel's back. That's why you got on a Sunday night during an NFL playoff game, the chairman of the Federal Reserve out there with a suit and tie, speaking in words anybody can understand in a minute and a half, telling you what this is, why it's ridiculous, and what he's doing about it. So, yeah, I mean, you're right to call it out. And I am not shocked by anything anymore. I'm surprised they've kept riding this. We're going to get the Lisa Cook stuff in front of the Supreme Court. I don't think that's going anywhere. That's got nothing. There's nothing there. These are frivolous kangaroo prosecutions. Or I shouldn't say prosecutions in the case of the grand jury subpoena, but that's where something like that would lead. And then right away, next day, Jeanine Pirro, the U.S. attorney for D.C., is tweeting that the only one mentioning an indictment is Jerome Powell. Really? You think anybody without worms for brains doesn't know what you're actually doing here? And then right away, what did you see? You saw the pushback. Finally, you've been waiting for it. You've been the one calling that out, saying it's not enough, that you're not getting the big bank CEOs. Then what did you get? You got the biggest bank, biggest badass CEO who covered for everybody. He was the only one that had to speak. No one else had to.
You're referring, of course, to Jamie Dimon, and you're absolutely right. We've been treating Fed independence as a red line. I've been saying, come on, they're stepping on the red line. Step up and defend the Fed already. It's finally starting to happen, not just from Dimon, but also from Tom Tillis of the Senate Banking Committee. He's made it very clear that he will not replace Powell until these charges are dropped, which I think is absolutely right. We'll see whether both of those stand by those positions, stand by Powell. In Tillis's case, he's announced his retirement. He started to buck Trump a little bit more. I hope we keep seeing a divergence between Congress writ large and the president. Dimon, I think I have a little bit more faith in. This sounds like his lane. And, you know, I've been calling on the private sector to speak out more against Trump. If there has been an exception to his credit, it has been Dimon. This is not the first time that he's spoken up, although I really wish we'd hear more from a lot more folks. I was going to ask, why didn't the market respond? I think we have the answer. I think we heard it from folks backing Dimon up, backing Tillis up. But am I right in assuming that the market still believes in Taco, that this is all a load of hot air and Trump's just going to chicken out as long as they make it clear that they still believe in the Fed, still believe in Powell, he's going to back out?
The government had a 30-year bond auction this week after the announcement on Sunday night, the video Powell made. That auction went really well. I think all of it got bought up at like 4.8% or so, 30-year bonds. Okay, so there were really no issues. Ho-hum. However, by the end of the week, the 10-year yield actually rose. More economic news taking hold, right? Because the job claims came in lower than expected, whatever. These processes, just like a credit default or a sovereign default, they happen slowly and then it all happens at once. And you're left wondering, how did this happen? That's constantly the danger. You saw this danger back with the tariffs in the equity markets when it was announced that they were going to be 90% or whatever ridiculous numbers was with the fake equation they came out with, right? Only when it actually went into effect did the market actually react, right? And I think it would be the same situation here. So taco, yeah. I mean, look, where did we get taco from? The markets, the bankers. It's our phrase, taco.
I just hope it's enough. I hope that there isn't a sense of complacency here that gets locked in so that by the time Trump has actually done some real damage, there's no time for the markets to send a strong signal that doesn't, lead to an economic drop-off, that isn't just pain that we all experience, that there is no more time for a warning signal. It's just all economic collapse.
What has this hot air been worth? Like I just told you, that the 10 years at 420 again, it's back at where it was in August. It remains range bound between like 385 and 480 for the last almost 4 years. If he would just shut up, or the whole administration would shut up with these ridiculous allegations, just let it play out and get their person in there in May when the term is up. How much is that worth? Is that worth a quarter point to the 10-year yield right now? It might be.
And just in summary, you're talking about the interest rate that we're paying on our national debt. You're talking about how expensive it is for the United States to keep borrowing, to keep paying off the last deficit.
We are auctioning. Look, no one should really give a shit about this, but the president's bringing it into the fore, okay? No one should care about the Federal Reserve. I'm happy to talk about it. It's an interesting topic to me. I just told you we had a bond auction this week. The federal government auctioned off 30-year debt, which it committed to paying for the next 30 years, 4.8% per year. That's real. And at some point, if you keep f***ing around, the people on the other side of that are going to say, yeah, I'll buy it at a higher rate. Not 4.8, maybe 8.4, God forbid.
Well, I'll have to admit, I'm not exactly following these numbers, but I think the point is that the cost of our debt was going down and now it's going back up again.
Look, the point has generally been range bound, and it was trending down for the last year, right? The 10-year yield still is lower than it was a year ago, but now we're back up to levels we haven't seen since August.
It sounds a lot like the inflation story. We came down from the high highs. We hit a low in April, and now we're back up to, 2.7%, 3%. Exactly the same story, range bound above the 2% target, above that level at which we personally all feel internalized costs rising across the board.
It is definitely tied to that. He's exactly right.
And again, I think this K-shaped economy narrative, we've been talking about it so much, but to a certain extent, everything that's going right in the economy is in spite of Trump, and everything that's bad about the economy is kind of his fault. With inflation, with the cost of our debt going up, it doesn't need to be this way. And Powell's the one himself who says that inflation would probably be a lot closer to 2% if it wasn't for the tariffs. So once again, the Trump chaos, we're all paying for it.
There's people that are going to disagree with you on that. On the tariffs, it seems like there's wide agreement that they're worth right now 0.2 to 0.4 on inflation. So if inflation was just 2.9%, call it half a point, is because of the trade rhetoric and tariffs. How much else is what I'll just call bad vibes worth? And look, they got the point. You deserve some credit for this. They've rolled the tariffs back month after month in terms of the effective rate throughout the entire year. And you are probably right that in year one of this second Trump administration, we've probably seen the high of tariffs as a percentage of GDP. They're not going back up from here. I can't see that. Again, nothing would shock me, but I don't see that. Right, so if we want to get the rates down, you got to do things that make you seem like a good credit and not do all this erratic stuff. It's every day. It gets exhausting.
The thing that keeps getting me about basically everything that Trump's doing right now, it's completely unnecessary. It's completely unprompted. He's just waking up on the wrong side of the bed and thinking, what can I break today? And something that's gone, I feel, a little underreported. Again, I've been on the weeds on this Powell stuff since June. But something I feel like that's going really unsaid in all of this is that Powell didn't lie. This is trumped up. This is a frame job. Powell did not lie. And if you're asking what even is the lie that he supposedly told, if it's the same one since June, it's this quote. And if you haven't been following this like I have, you're not going to believe what the alleged lie is. It's so inconsequential. quote, "There's no VIP dining room. There's no new marble. There are no special elevators. There are no new water features. There's no beehives, and there's no roof terrace gardens." This is about decor. This is about interior design. I don't know why it's always about interior design with President Trump these days, but this has nothing to do with interest rates or accounting or malfeasance or fraud or money laundering or poor performance.
Insider trading.
This is about decor. And there's 4 accusations being made in here, and I'm so sorry to have to go through them quickly because they are so silly. There's no VIP dining room. There's an elevator that goes to a dining room. The elevator didn't used to go to the chair's office. They're extending it. That's the VIP dining room. The normal dining room, they're extending the elevator that goes to it. 2, no new water features. There was a water feature in the plans initially, in the 2021 plans that were approved by the National Capital Planning Committee, which, by the way, the ballroom wasn't. So there was one, but then they took it out because there were cost overruns. So to save some money, they got rid of the water feature. It's funny because Pulte is actually accusing Powell of malfeasance because they are no longer following the 2021 plans to the letter. That's because they made cuts because of budget overruns like the water feature.
Don't apologize for calling this out because people should know it's bullshit.
Okay, and this is the absolute silliest. No beehives, no roof terrace garden. So no beehives. They have a garden. It's got plants for local pollinators. No beehives, just gardening. No roof terrace gardens. They have a parking garage. The parking garage is below ground. Above the parking garage, on ground level, is a garden, and that garden contains plants that local pollinators like. They looked at some plans. There is no there. And again, this story fundamentally is about Trump attacking the independence of the Fed. That is all this is about. But this is just completely made up, and this is Trump testing power just like he did with Lisa Cook's mortgage, just like he did with Letitia James's mortgage. These things are completely above board. We used to live in an era where Trump found the tiniest little thing and rounded it up into a big scandal. Hillary's email server is, of course, the number one example of that. She shouldn't have done it. It wasn't nearly as big of a deal as he made it out to be, but hey, let's hold politicians accountable. We're no longer in the era of him rounding up. We're in the era of him just lying when he's making these accusations.
Yet they have nothing. And I want to be clear on something. The Federal Reserve, and certainly the chairman, are not above reproach. They are not unaccountable. They are independent in terms of making monetary policy decisions about the economy, namely the cost of credit and bank supervision, independent of political actions, such as elections. That's what Fed independence means. It doesn't mean that they get to do whatever the hell they want. Independence from politics, not accountability. They get criticisms that, the president should have their say. He does have his say. He appointed this guy in 2018. And Joe Biden could have put somebody else in there. He didn't. He renominated him. Donald Trump's going to get another bite at this apple when the term is up in May. But now we're getting to a situation where Jerome Powell here actually has the leverage, because Jerome Powell's term as governor does not end until 2028. There is it is customary that when the president nominates a new Federal Reserve chair, the outgoing chair resigns for the remainder of their term.
So just to be clear here, Powell has 2 positions. He is a member of the Federal Board of Governors,
which is a 14-year term, yes.
And of those governors, he is the chair, somewhat like how the Chief Supreme Court Justice is first among equals. But the chair position is up this May. His total governor term is not until 2028.
Yes. So he can actually stay on. And the president must nominate the chair based on one of the Board of Governors. So when we say we're going to nominate Kevin Hassett or Kevin Warsh or Waller, what that's saying is I'm going to nominate them. Powell's going to resign for the remainder of his board governorship, and I'm going to now get a chairman and an additional new governor. Now, the president is already getting a governor because Mirin, who is filling in through January 31st for Kugler, who resigned late last year. Now, if you take Tillis at his word and he's not going to approve anybody, that means that for January 31st, when Mirin's term is up, he's not going anywhere. The legislation allows him to continue serving until someone else is named, even if it's him. I am sure that in the wake of this, there are people urging Powell, hey, man, stay on. We're not going to trust anybody he picks.
So the timeline is January 31st. Miran's term is up. However, if no replacement has been confirmed by that time, he stays in.
Correct.
Then in May, Powell's chair term expires. And what happens then? If Tillis makes good on his word and no chair has been reconfirmed, does Powell stay the chair or is there no chair?
The vice chair automatically assumes the chair's duties until a new chair is confirmed.
And who's the vice chair?
Philip Jefferson.
Do we know anything about Philip Jefferson?
We had a presentation, I think it was today. I read what he said. Basically, he thinks we're about neutral right now. He thinks that the risks to employment and inflation are about equal and that he is willing to cut rates further, but based on the current environment, he would hold. He did vote to cut, I think, the last 3 times.
And you pointed this out at the time. There was a group who said, we want to cut one more time, but only one more time. So he's essentially one of those guys.
Yeah, and it sounds like for the next meeting, he's a hold. But things can change and maybe he changes his mind. You asked me if I know anything about the guy, that's something for you.
Option C.
Then you need the presidential nomination and Senate approval. That process has been taking like 90 to 100 days. Now, they can always accelerate this stuff. Look at how quick they got Miran in there, right? So they can always accelerate this. But with the grand jury subpoena and the constant fighting, even if this was going to be simple and straightforward, you're going to get senators who want to slow this down and peacock. And at this point, you got to say he deserves it. He's brought all of the president has brought all of this on himself. He was always going to get his bite at the apple in May of this year. And every day that's passed since he's come into office, the shelf life of blaming Powell for anything that may have happened as a result of the tariffs has eroded. So there's no more scapegoating Powell. All you could say is he kept rates too high. And you're just pitching to people who otherwise don't know what you're talking about. Because anybody who does know what they're talking about doesn't think rates should be as low as the president thinks, or even really Stephen Miran thinks for that matter. He hasn't convinced anybody of his views of the 19-member Federal Reserve FOMC. Doesn't seem like there's anybody even close to where he's at. Right?
One last scenario I want to ask you about. Let's say Tillis makes good on his word. Trump theoretically would have to pick from the remaining already confirmed governors in order to pick his chair. If he does that and say picks Miran, would that person also have to be confirmed by the Senate as chair?
Yeah. Because they're being confirmed for a different position. At this point, I think it's important that Jerome Powell actually would stay on as governor for the sake of monetary policy. And it's not without precedent. Eccles, who is Federal Reserve chairman, who's credited with independence from political influence, he had a spat with Harry Truman. Harry Truman wanted somebody else. Eccles did not resign. Eccles remained on and finished out his board term. It is Mariner Eccles for whom the Federal Reserve headquarters, the Eccles building, is named for. If you want to play games, which Jerome Powell has shown himself kind of be like a take no bullshit grandpa, even from an outsider, he's got the upper hand. And remember, this guy's a lawyer. This isn't some fly-by-night businessman who just wants to get in, get out. Like, Jerome Powell also did this the hard way. He had worked at the Fed for a long time. He didn't just step in and be like, I'm chair now. Oh, I'm on the board of governors. I'm just a highly respected guy. And that's why he was supported in 2018. I certainly supported him back then. Support him now.
Trump backed off of his first favorite second favorite. His first favorite is Besant, who's smart enough not to get anywhere near this thing. But his second favorite was Hassett, who we'd already labeled as a sycophant. It sounds like he's not in the running anymore. Trump very transparently and reluctantly has backed off of that. The prediction markets are already back in Warsh. We've talked about Warsh before. We saw him as a middle bad option, somebody who is still reasonable, if somewhat aggressive, and somewhat of a flip-flopper in the Trump era. There's another name that's been thrown out in the media, BlackRock CEO Rick Rieder.
Rick Rieder.
Rieder?
Yeah, he's well respected. He's on some media shows. He does a lot of public speaking. Don't know that much about him. I think he's their head of fixed income. Could be good. You know, a guy who's actually been in the markets and played the game. But at the same time, I'd have to look more into him. That could happen. I think he was interviewed, right?
To me, that just seems like we can file it under Trump likes people on television.
Yeah, you could. But at the same time, he is a well-respected market prognosticator.
You're locking in Warsh as your favorite here?
I don't know why Hassett was just suddenly pulled out. Maybe it was never going to be Hassett. I don't know. Maybe Trump just wanted to make the guy squirm a little bit. Poor Hassett. But after the grand jury subpoena, I don't think in an election year, I don't see how the banking committee would have approved Hassett, right? Like, he screwed himself. I really think if he had just let this ride out, I think he would have been able to get any guy he wanted. He could have put you in there if he wanted. Anyone. They haven't stopped him on anyone else. They stopped him on Matt Gaetz. That's it. They didn't stop him on anybody else. So now I think he shot his load.
And I think that gets me to my last point. Everybody wants to assume that Trump's doing this to exert pressure on the Fed because Trump wants low interest rates. And that's what Trump said, and I'm sure that's a big part of it. But Trump got 3 cuts last year. If, like you said, he just stayed quiet on Powell, maybe, needled him a little bit here or there, but not this perjury nonsense, he probably could have gotten away with nominating Hassett because nobody wants to rock the boat, because everybody wants to be Trump's favorite so they can call him up and make a deal whenever they want. I don't think this is driven mostly by economic policy. I think that Trump is just continuing to flail as he just spirals and loses popularity and loses control over Congress ever since the Epstein files opened Pandora's box.
I don't know. I don't know what win there is in attacking the Federal Reserve Chairman. And anybody who cares about Jerome Powell knows this is bullshit. And anybody who doesn't know Jerome Powell from a hole in the wall or at the local AARP meeting does not care. And you're not going to ever convince them to care on this issue. So
obviously, affordability is the name of the game. And just like Republicans were teaching us during the Biden administration, Trump really needs to stop trying to tell people that the economy is better than they feel like it is. At the end of the day, it is subjective. You came up with a really, really neat little way of thinking about how to address affordability as a party on the local, state, and federal level. And I just wanted to give you an opportunity to run through that real quick, because it's not the kind of political platform that we're used to in this country, but I thought it was really elegant the way that you laid it out.
I took a bottom-up approach on where the issues of affordability are impacted in our communities. So let's do housing first. Housing is a local issue. Housing affordability is concentrated in 8% of U.S. counties. 239 counties out of 3,125. But those 8% of counties represent a third of all Americans. In these counties, homes as a percentage of your household income are exceeding 30% of your income. In large areas of the country, good areas of the country, a home affordability is really not an issue. Illinois, Michigan. And if you have home affordability issues, that's idiosyncratic. That's specific to you. Right? Subjective. But at a county level, we are only seeing housing affordability as a premier issue in these handful of counties, but represent a third of the total population. And so with that, local politicians, that's where this stuff resides. It's incumbent on them to be able to build and allow the building that has to occur to meet the market demands. And trust me, people do want to build in these areas because of how expensive it is. And how do you get prices down? Is to build.
I think that's a really great point. But at the same time, I don't want to do the thing where we say that Americans just need to move. Americans, more than maybe people anywhere in the world, move to where the jobs are, move to where the economic opportunity is. So I really never like to punish people for moving for a job or telling them to move somewhere that's not as economically strong.
It's all just bad economics, Kobi. It's bad economics. Why would you build houses where the prices aren't high? What's your incentive? Hello? And the prices are high in other places. Why? Because people want to live there.
Yeah. So I think your point is well taken, that this is really an issue that's concentrated in a couple of local areas, and those local leaders, those local areas need to step up to address it. But on energy, you're saying it's a state issue.
Yes. We just heard the announcement of the administration partnering with the governors of 13 states to have an emergency auction with a power company, PJM. There was an auction last year. It's a regulated utility market. So there's price caps. The auction went to the price cap. So it maxed out. In addition, the demand for power was over 6,000 megawatts more than there was available supply. So in a uncapped market, you would have went well through the cap to try to meet that additional demand.
And what states are these?
As I said, 13 states. You ready for the list? New Jersey, Michigan, Pennsylvania, Maryland, Illinois, Ohio, Delaware, Indiana, Virginia, West Virginia, North Carolina, Kentucky, Tennessee, and the District of Columbia. Those are all PJM markets, right? And this is not going to get into details. Regulated utilities, so they're allowed to have monopoly power. That's why there's price caps, the whole thing, right? But the point is, you don't have supply. You can't meet it. And so it's great. I love this. I mean, I've wanted this to happen now for months. Have another auction. They want to have another auction. They're urging PJM to do it. They're not blackmailing, extorting, or suing. They're using their political capital to say, hey, PJM, we need to have another auction. Host one. They're going to host another auction with the goal of having companies bid for power on a 15-year contract basis. The companies get a locked-in fixed rate, And with the certainty of the contracts, right, basically purchase orders you have in place, new power plants will be built. Expectation is up to $15 billion in power plants across the PJM markets. Some of these states have excessively high power costs and are rising year over year significantly, over 5%, some of these states. Great, love it. On the other hand, Dominion Energy out of Virginia just had to win a lawsuit against the administration to continue construction on an $11 billion offshore wind project. And this offshore area where it is, it's the 5th best area in the country for offshore wind.
So states are getting together. They're saying to all the big companies, all the data providers, all the server banks, and you're going to get the money for new power plants up front.
And a market-based solution. It's an auction. Everybody knows who's going to be bidding in the auction. Here's the terms. Here's your participation schedule. Everybody knows.
And so the states started it. Now the White House is on board.
Desperate for a win.
Except for Virginia, where they're stepping on the wind project because, Trump just really loves burns. He loves them so much. I wish I knew the power that these windmills have over boomers.
They don't like them. There's people that don't want to look at them. Okay, that's fine. They use that as it's going to decrease my property value because I would not buy this place if that wind turbine was there. But there's scant evidence that when wind turbines are erected, that property values decline. But it does fall? Their electric bills. Or at least they get more manageable and don't sporadically rise. And it's not just the birds, Kobi, okay? They've slowed down a solar project in Nevada. Nevada, the #1 state in the country for solar. It's the desert, for God's sakes. And they're slowing that down. Do you want to win or not?
So then what is the federal government's role? Where are they going to help get affordability under control, try to get these prices down a little bit?
The best thing for the government to do right now, okay, is act like a good credit. Don't act like a 1980s, 1970s Latin American country who is going to engage in wild populism and just spend. And also certain socialization in industries whomever deems important for national security and use other people's money to do it, right? These equity stakes that the federal government is taking in ABCDE companies, maybe you like it, maybe you don't. It's not their money. They have no skin in the game. You got to focus on being a good credit to reduce the base interest rate that we pay on our debt and reducing inflation to go with it. That's the point.
Big picture, it sounds like you're talking about stability, which is a theme that we've been hitting on a lot recently. But on concrete terms, right, what you're talking about here is what we started with the Fed, right? You're saying that in a stable, strong economy, we're able to get our nation's interest rates on the bonds down. And even though it's not one-to-one, even though it's not quite direct, that gets the credit card interest rates down and the mortgage rates down, the cost of doing business down for everybody. And
Correct.
That's why we want the federal government not to juice current economic sectors, not to up and down tariffs every 3 months according to what's politically feasible or economically viable that day, but to provide that long-term stability so that other people can go assume risk with confidence. I think this makes a lot of sense to me. Politically, the issue is, unlike in a lot of other countries, especially Western European countries, there is not this very strong hierarchical relationship between the local, the state, and the federal party. So in order to get something like this together and to get that kind of unified messaging across the states, across the counties, across the federal level, is something we haven't seen. If it's going to happen, it would be in a year like this. That sort of centralized infrastructure, centralized messaging infrastructure doesn't really exist. But I really like this idea, and I think that a lot of folks can build on it strongly moving forward.
Let's take your pick. Where do you want to be involved?
That's a great way of putting it. Look, we did the big stuff up top. There are some quick things that I wanted to get into. And on the topic of interest rates, the first one is this credit card deal. Trump all of a sudden blurted out he wants to cap those interest rates at 10%. And I'll tell you right now, I think this is a fantastic idea. Because for so long, I've been so frustrated with all these religious conservatives who said that they want to make this a Christian nation. Look, every single Christian from Jesus through Calvin, the first 3/4 of Christendom, they would not have recognized this as a Christian country because we have usury. So if Trump's starting to pat that down in the name of Jesus, I'm all for it. But strictly from an economic perspective, is this really a feasible plan? Like, let's say for a second, Trump regains control over Congress, convinces the House of Representatives, convinces the Senate. They write it up, they pass it. In a couple of months from now, this goes into effect. Economically, is this a good thing? Should we want this as a consumer?
First, I don't know that it is usury, but we can debate that another time. No, this would be terrible for consumers. And I'll make a simple case to you on why it is. So when this was announced, my mind immediately jumped to credit unions. Why credit unions? Because credit unions are nonprofits. Credit unions, they'll offer credit cards, right? Who doesn't offer a credit card? That's actually a market that's hyper competitive. Everybody's fighting for your business. There's no shortage of credit cards you could choose from, right? Looking at the credit unions, they're nonprofits. As part of being a nonprofit, they're legislated. Their interest rates are capped at 15%. Within the legislation, there is an ability to increase the cap. The credit union organizations have to get approval from several different organizations. I think the Department of Treasury is one. Maybe some House committee or oversight committee is another, whatever. But it's like approvals going to get a permit for building a house, right? Everybody's got to agree. Right now, I think since 2022, that cap's been raised to 18%. So I went couple different credit unions that are local to me, and I looked up what they're offering for credit card rates today. They're between 12 and 18%. So what this is telling you is that the nonprofit organizations that offer credit unions, they could not make the 10% rate work. So what does that mean if it actually went into effect? Likely, credit lines will be vastly reduced. Even at high credit scores, even at high limits, you may see your limits reduced, especially if you're not a particularly profitable customer. If your credit rating is, below a 650, you may not be able to get a credit card at all. And on the high end, what I would expect to see is significant leaning into things like rewards programs or the exclusivity of different things, such as what's to stop a bank from buying 1,000 tickets at Yankee Stadium and reserving them all for their super duper new exclusive customers?
As hard as it is for me to sympathize with Yankees fans, the point is well taken. And we saw a statistic this week. The top 10% of U.S. earners now reflect a record 49% of all consumer spending. So taking credit cards away from folks towards the bottom of the economic ladder, while folks at the top of the economy still have access to all of that liquid credit, to all of that, cheap money, that would only lock in the K-shaped economy more. That would only keep driving both sides of the equation in completely opposite directions, because the consumer spending just wouldn't be hit as much as it would have been 10, 20 years ago. That being said, I've gotten a little bit of a chuckle out of how seriously everybody's taken this. Maybe this is a little bit of a reverse of the Powell controversy. So maybe I'm the one who's being a little overconfident right now. But just because this would require legislation, I don't think this is going to happen. I think, once again, this is a break in case of emergency, crazy populist idea Trump's throwing out just to try to get some sort of positive momentum going for his administration.
This will flat out not work. He is running out of his own bad ideas in pursuit of a win, of something that's popular. So he's now looking at the bad Democratic ideas, one of which is pitched, this is it, by Bernie Sanders. He introduced this as a bill last year, and it's gone nowhere.
Holly co-sponsored it. If this is a bad idea, it's a bipartisan bad idea.
Absolutely. But why is it coming up? It's populist. And you're not mad at the credit card interest rate. You're not mad at the rate. You're mad at what's causing people to go into credit card debt and reach for plastic. And by the way, a credit card is not for that. It's a liquidity product.
It's funny that you say that. I don't know how I feel about it intellectually, but emotionally, you're right. I'm not nearly as mad at my credit card company as I am at the health insurance company.
Sure. Yeah. Right. And part of that is because of competition. There's way more competition in credit cards. If you want credit card interest rates to come down, the base rate coming from credit cards is the federal funds rate. We start with that. Then we add usually a 3-point spread, gets you what's called the prime rate, which is right now 675 is prime. Then I can start adding numbers up, and then you get to about your 20%. And trust me, if companies right now could do a more profitable product at 15% and mitigate credit losses and expenses, they would. Again, the nonprofits can't even make 10% work.
Well, I think the last bad Trump idea I wanted to get to today was Greenland. I don't think the intentions, or at least the stated argument for Greenland, is primarily economic. I guess this is kind of national security, but I just wanted to check in with you, Banker Bill. There's no chance that taking Greenland is good for the economy, is it? I think there's two kind of arguments that are being made here. One is something about the Northwest Passage, the idea that we're going to be able to have a lot more shipping lanes over the Arctic now thanks to climate change. And that, to me, seems absolutely ridiculous. As the head of NATO, we basically have control of the Arctic from Alaska to Finland. If we wanted to capitalize on that, we'd get to building up that domestic manufacturing and build some more of these icebreakers. If we invade Greenland, then all we have is Greenland and Alaska, and we lose Scandinavia. we lose Canada. Secondly, rare earth minerals. That's been an argument that's finally started to creep up a little bit recently, following up on the heels of the Northwest Passage, the national security stuff, a little bit like Venezuela, coming in a little bit after that first primary argument hasn't really been flying. The math hasn't been mathing. But here again, I think your point about China and Venezuela is well taken. If it was that profitable to take these rare earth minerals out of the ground in Greenland, Denmark would be doing it already.
Denmark's rich. If they were reasonable to get out of the ground, Denmark would. This is not a place where, oh, they're there, but they don't have the money to get them out. Or, oh, they're there, but they don't have the know-how and intellect to get them out. I mean, who do you think we're dealing with? And also, I don't even know where this is coming from. We can do whatever we want there. And you want to buy it. Okay, buy it for what? For how much? What if Denmark did name a price? What if Denmark named a price and said, this is the price, but it's in gold bars because I don't want your dollars. I don't trust them. I want gold bars. What's he going to say? Oh, yeah, sure. We'll do it. No, it's going to be a negotiate. So, maybe the Danes can just do that. Start negotiating and run out the clock. We already have a base there.
We have multiple bases there. And I found out today there's actually already 2 American mining companies building up the infrastructure to get rare earth minerals out of the ground in Greenland right now. We have everything we would want. We would be losing sphere of influence. We'd be losing access to the Arctic if we had all threatened our current position as the head of NATO, which nobody wants to take from us.
There must be something that they know that we don't know.
No, stop it. That's not true. Trump is spiraling because of Epstein.
Why is there not already a bill on the president's desk to end all this with the implicit message that if he vetoes it, we have the votes to override it? How are we not already there? Why are we wasting time on this? The Danish have been a reliable ally for forever, maybe more reliable than anyone.
Well, speaking about reliable partners, thank you again for listening to this episode of Is It Bad for the Economy? Thank you so much for sticking with us. And I think we've got a special shout out for a listener from Banker Bill for some sweet new tech we've been using.
Yes, you may have noticed I have an excellent new microphone. This comes from as a gift from a loyal listener, Eric. We just want to give him a shout out. He became a dad recently for the 2nd time. So he's doing wonders for our U.S. fertility rate. Also bought a house recently. We wish him, the family, the whole thing well, and we thank him for the microphone.
Folks, we've got 2 microphones already. All we need from you is to give us a review, a 5-star review on Apple Podcasts and Spotify, to share this podcast with a friend so that we can finally up the economic discourse in this country and stop just assuming that the Republican has got to be better than the Democrat, because at least when it comes to Donald Trump, it certainly is not the case. We've got a very special guest for next week, so we're really excited to share that conversation about AI and employment with you in just 2 weeks. Thank you so much.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time